Good afternoon, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to look at a couple different ways that you can consider earnings trades. A few of the places that we are participating in this, and I'll start with, because I've got three different ways of looking at this that I'd like to share with you, and the first that I'm going to look at is here in Snapchat. So when I think about buying Snapchat, obviously this is not something that is really that exciting to me as far as a company is concerned. I have no opinion whatsoever as far as the actual earnings themselves, but the main thing that we're trying to do is pick up the series that revolves directly around the implied volatility spike that you see that is derived from earnings. So not so much those that expired next week, but the series that will actually revolve around the report, and we're looking for the implied volatility to expand in that. So if you can get the implied volatility right, which is the main concept as you head into an earnings report, and then you can also get the direction of the move correct, that's where you kind of have both of those Greeks working in your favor. I think this is something that you could still look into as we have an additional week in Snap earnings. Now, one that's a little bit shorter term, and one that we've been working this week in and out, is Tesla. And this is a very similar concept, but this one's going to be a little bit trickier to follow as we get into next week. As we've been playing it this week, the idea of the rally into earnings has been okay. It continues to hold the 8-day exponential very cleanly, and that is a good level that you'd like to look at for continued strength. So what we're doing with this one, and you can come over and see the position here where we're looking at the exact same thing pretty much. It's just the fact that we have one less week in Tesla as we do with Snapchat, but you know, a good place to participate in both of those ideas. So you've got the longer term earnings that you can still get into. Tesla is a little bit shorter, and then the idea that I'm going to do with both of these, Tesla more so than Snapchat, is exactly what I did with Google around today's report. So, you know, try to catch it into the move if you can, and treat that as one independent standalone trade. Then when you actually get into the report, what I like to try to do, provided you share a bullish bias in this, so provided that you do still have a bullish take on Tesla, this is a way of employing this strategy that I really like. And what I had done here is set up a basic put credit spread with the idea that you take in this credit to help pay for a bullish butterfly. So we have this positioned around the 950, this being the core body part of the butterfly, executed that $20 wide. And as you can see today, it had a decent result. Now I got out of it a little bit earlier as Google softened up, but that's one way to pay yourself for getting the fly. Of course, you do still have to acknowledge your downside risk, but this is a good way of giving yourself some chance to collect some premium. Ideally, if you can catch a pop-up into those extensions and center the butterfly around it, that's a good way to do it also. And those are, you know, three places to focus on those types of strategies. So I hope that helps. One other thing I wanted to make sure that you were aware of is that as we go into the weekend, this will be the last of the early bird pricing on our Austin mentorship. So if you'd like to come down to Austin, meet the team, and focus on trading for a couple of days with us, this tends to be a really excellent seminar and a good time to, you know, bring a focus back to your trading. I always really enjoy it, and we do expect on having a full crowd there. So I hope you find that helpful. Let me know if you have any other questions, and we'll touch base in the next free video.